Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning webcast. Okay, daily chart, and you can see Friday that comes right down to the daily mid-band. It made a double bottom there at 35, converted, and we put a couple videos out on Friday. We talked before the market about how, look, if you were the bears and you want to progress this market down, you could not, under any circumstances, create, basically a granite floor at the daily midband. That's exactly what they did right here. 1 and 2. 1 and 2, and off we go the rest of the day. It's a great day for us. We did about 28, 30 handles. And what you've seen here is an hourly chart in the overnight is new highs, little pullback, new highs, little pullback. The hourly midband there is at essentially 53.5. The new weekly pivot comes in at 37.75. Forgot to put that on the chart. There it is. Magic. So today you've got the opportunity for the bulls to really continue to progress to the upside. I think it would be a slow bleed to the upside if they were to do it. I'm always a little more bearish on Monday mornings because it's an opportunity for the market to come in and figure out where there's a little bit of value. Is it back at the Globex low, in and around, 50, 51? Is the daily midband going to be enough? Or are the bears going to go ahead and put a day together? Go back and test this weekly pivot. If the bears are going to put a day together and test the weekly pivot, then the first thing you need to see convert is 53.5 to resistance. If 53.5 goes resistance, then they got to deal with daily pivot. They'd have to convert daily pivot and then go ahead and make a run at the weekly pivot. So, the problem is that's 18 handles from here. Not unheard of, but that's a pretty tall order for a Monday morning. So the most likely outcome is little pullbacks, new highs, little pullbacks, new highs, kind of rinse and repeat. And, we're starting to get into the situation where we are seriously starting to talk about where the all-time high is in this market. It's up at 28.79. And we are really not all that far away. We printed 60 this morning. So for me, the pressure on the bulls is, look, if you're going to go through all this, you need to go make a new all-time high now. And if you can't, then there may be hell to pay on the back end of that. So each side, the pressure is on. Bears have to figure out a way to convert weekly pivot to resistance and keep it converted so they can go back and test the 2800, 2810 level. The bulls want to go ahead and reach up and eventually get back to the upper band here on the daily, which it would take about a 68, 69 print to do it. The bandwidth is pretty tight considering it's it's under 2. So there's certainly room for another band ride to the upside. And there's a point where that band ride to the upside is going to get you back up 78.5, and we start dealing with all-time highs. And while I'm here, the key to this entire year was, at least so far, you go back and you do these matching lows down here. You can't convert, that was at the 200-day simple. You can't see it on the chart. Then, there's just no ability to deal with anything below the 200, which keeps it ultimately as a buy dips market, and you just continue to make the series of higher lows, higher highs, and the whole deal. So that's a big picture of the year. In all of this, though, has been tremendous volatility. So it's been a great trading year. All right, that's all I got. We'll be out on some stuff with social. Take care, trade them well. I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.